What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is July 22nd of 2021. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to spend some time to talk about three major cryptocurrencies that not only think are showcasing great technical setups in the sense of their price action, but outside of that as well might be showing some great fundamental developments to carry forward that momentum and bring more excitement into these crypto assets. I want to be very clear with you guys. These are not the albeit three cryptos that you should be buying today. It's not financial advice. I have a variety of other plays that I'm invested in, and some of these plays I'm invested in and some that I'm not. Some of them I'm waiting for a technical setup. So again, bear in mind, guys, that these are not coins you should just go all into. And I'll actually talk a little bit about how, again, I'm exposed to some of these and some that I'm just watching. So let's go ahead and just start with the kind of shift in narrative here, because everyone was clearly fearful the other day, calling for 25K, 20K Bitcoin as we revisited back to low range. But as per usual, we get a spike in volume, the biggest volume candle we saw across most exchanges since back a month ago in late June, and prices started to really pick up. We had about an 8% move on Bitcoin. So again, during these periods of fear, we want to focus on what cryptocurrency plays are going to be the best place for us to be exposed to. And it's not always just chasing high risk, high reward plays. In fact, it's probably chasing somewhere in the middle. And this is the strategy that I've always depended on between equity markets and crypto markets. And that is finding medium level risk and also ones that can give us potential medium level returns above the norm, which is Bitcoin, right? We want to be able to outpace Bitcoin. So one of those that I want to start with, I know it's nothing fancy, but this is kind of a general slide that we had for analyzing Ethereum from our last Dash report discussion, our overall newsletter that we sent out. And this will show you guys how I think about things. This was back nearly a month ago when we put out the report. And we pointed out a few couple things here when we take a look at the Ethereum logarithmic chart. So let's go through these points here, right? Ethereum itself is the second largest cryptocurrency. It's a well-established play. It's leading in the DeFi space, albeit there are some layer one protocols that are starting to build out their DeFi ecosystems. Ethereum is the second largest asset. And the question here we have to ask is it going to be better to be exposed to Ethereum here? Well, first off, let's go ahead and dive through this so you guys can get a good read. And if you guys are interested, you guys can always check out the link down below in the description for the Dash report. So first off, we focused on the fact that, as we talked about here on the channel and in the Dash report, that there was going to be a general resistance range around 8 million Satoshis. This was due to the fact that we've got this kind of midpoint of contingency between serving as resistance, point of contingency here, and also here as well. Right, that this was going to be a significant price range to watch for. And lo and behold, we actually did get that resistance around 8 million sats. But the most important thing to watch for, albeit we knew that there was going to be some form of correction, was for ETH not to completely plummet down. That's what you would see within a bear market. But in fact, what we've actually seen here is Ethereum is holding on this previous line of resistance and making it support. It's had 2 retests already as we zoom in here to the chart, right? So since all the way back here in July of 2019, where we've been building this line that, again, was a point of previous support that broke down and then started to serve as an ascending line of resistance, we broke through here in May and have now turned it into support. And the question here is whether or not we can continue to hold up against this point of resistance and hold this support and eventually break out for a final secondary wave here for the overall bull market. A new major parabolic move for Ethereum. Now, I know that this chart leaves open for quite a wide time frame, possibly going into 2022, and who knows exactly when it's going to happen. I wouldn't take this line in this case to heart, guys. It's not really about the time frame here. I'm just generally showcasing here that I think we could get what would generally be seen as a wedge, a breakout here against resistance, or an ascending triangle, if you will, where price would really start to break out and test previous levels against Bitcoin. Right? And that could mean if we go up to 0.12 BTC, or we go up here to, maybe even new all-time highs around 0.18 BTC, that could be a potential 2-3x against Bitcoin. So that's a great setup. You don't always have to have the small cap plays in this case, because multiples and returns are not going to be as great as they used to be in previous cycles. A 2-3x against Bitcoin is great if you can get it. And if you can protect and lock in those returns, that's what you want to focus on. Good medium level risk, great medium level rewards, right? And again, there's other major things coming up like the Ethereum London hard fork, which is going to include the big EIP or Ethereum Improvement Proposal 1559. And to put it simple, guys, although it is a controversial fork, we'll have to see over time how this rolls out. And here's the great thing. If EIP 1559 doesn't work well, it can always be revoked. You can always go back and implement new improvement proposals that revoke certain code changes. And that's the thing, this isn't going to be some kind of groundbreaking fork or update to the protocol that would kill Ethereum, right? If anything, it's very clear now that with the fee burning that comes with EIP 1559, this will make Ethereum's monetary policy, even with the shift from mining to staking, all of it as whole, making ETH potentially a truly deflationary asset where its supply is reduced over time, or at least not inflationary. And that's huge. That's very huge because that puts ETH on the table for potentially starting to take some of that store of value narrative in the crypto space, not to mention all of the functionality built around it with DeFi. Let's go ahead and take a look at Omisego. Now, Omisego has been a play that I've been invested in back here since around March. And I forgot to mention, just for transparency's sake, ETH is one of my larger positions, guys, again, about that philosophy of medium risk, medium reward. Omisego is another play that I have some exposure to. It's not my largest position, and it's far from being my largest position, but you can see here that I generally bought around a price range, a little bit under from where we are, somewhere in this low price range here back in March. And even though I've had some waves here where it has gone up, more than 2x here, that, yeah, you could take profit, you could sell it. My major thing here is this, is that I not only would like to bear in mind that I can sell at a generally higher range here, possibly sometime here in August or here in September of 2021. And what I basically did is I copied the price range here, expanded it a little bit because each of these waves have been getting larger and larger as we're going through a broader expanding channel of higher lows and higher highs, but potentially even have a parabolic breakout like we've seen back here in the past for Omisego. So this could really start to expand towards much larger levels. But overall, I would say that in a setup like this, what I would like to do, and albeit there's not too much fundamental developments that I'm excited about, some of the layer 2 work that OMG Network is doing is exciting. Generally speaking, in these kind of setups, I like to trade the expanding channels. I like the price action, and I've seen that this one is a momentum play. It can have some big breakouts, right? So when traders start buying it, it starts moving up like crazy. So again, that's the thing I want to watch for here, right? I don't care so much about the fundamentals. I'm wondering, can I get in at a nice low entry point? Right now, we're at that green line. I'll go ahead and remove this so you guys can see the real price action now, right? We're at this general low range, right? And overall right near the support line. And then we're expecting the price is going to start picking up, albeit it might not. It might start pulling down here. But the great thing is you can set a stop if you want, right? You can set a very tight stop here and cut your loss to something like 5-10% with a potential reward range of doubling or tripling against Bitcoin, maybe even more, right? So that's the kind of setups that I like here. I like to buy into fear because you get nice discounts that you just don't generally get. Now, the third cryptocurrency I want to talk about today is Compound. Now, Compound to me, even though I've used the Compound protocol for a while, really just didn't have, I guess in the sense of its launch, this is with a lot of crypto tokens. You don't want to buy right away. Everyone wants to buy into the FOMO. They want to buy into the hype of a new token launch. But in reality, it's good to wait until price action starts to settle. And now I think we're finally getting that with Compound. And for those who don't know, it's one of the largest savings protocols alongside Aave, right? So where you can earn high interest rates on your USDC savings, USDT, etc. But here's a really cool thing. After we exited out of the downtrend and started to set in a higher high, relative high than over here, and also higher lows, we've continued to hold in this general consolidation range since back here in late January. Right? It's been a couple months here of sideways price action against Bitcoin. And to be honest with you all, these are the setups I like to trade. Not only because if you're more of a really short-term trader and you like to trade within like a month to 2 month period, maybe for example, you want to trade these kind of ranges, right? So you can see here that right as we came to this range, of course, a little bit higher in this manner. And you always want to be a little less greedy. You want to pay a little bit more of a premium so you make sure you get your order filled. You can see here that we went from around 7,000 sats up here to more than doubling here in just a matter of really a couple weeks, really about 2 weeks here in price action. That's a great opportunity. Now, this rode off of some of the fundamental news that I'm very excited about, which is the Compound treasury accounts. Now, I'll tell you guys, I don't have really any major exposure. It's probably a fraction of my portfolio, like less than, I'd probably say like, actually, I don't even think I technically really own any Compound tokens. All right, Compound overall is a really, really solid project. I don't have any allocation to it, but I gotta say, products like this that offer a fixed 4% APR for institutional clients, for everyday participants, this is something that gets me really excited because you're offering a yield that's nearly 100x of what's offered in traditional commercial bank accounts, and it's fixed, right? And this is the cool thing about compound is as the rates have been anywhere from, sometimes 4 to 8%, they can easily provide this fixed income product. And overall, if they have to provide more APY in this case, they've already said that they'll be able to compensate for that, to be able to maintain the 4% if the rates on the market go towards around 3%. I think the overall idea is really, really splendid. And you can see here that even though we've pulled back here throughout most of July, after we reached these relative highs here in July, what we've seen here is that in this kind of midpoint consolidation range, you can see from this general range of a little bit under around maybe like 950,000 Satoshis, right? You can see that there was some points of resistance here, also point of support here. And you can also see resistance here. Price also kind of was in tandem here. It's a general range of about 100,000 sats between 1,500,000, technically I'm misspeaking here. Actually, no, I would say about 150,000 sats. My apologies, that was right. So about 100,000 sats here of price range where we've seen resistance. And now what we're doing here is we're turning it into support. This is a perfect setup what you want to see because both times we went top to bottom, and now we're starting to make support at a higher range. This signifies the buyers aren't waiting for this to sell all the way down here. It's not bear market pandemonium, at least not in Compound's chart. It looks really, really healthy. And the volume profile is staying quite healthy as well. But here's the kicker as well. For those of you who are exposed to Aave, and this is another chart that we had in the dash report for Compound, which was one of our picks this month. What's really interesting is that Compound Aave, we're looking at a specific ratio that showcases how much Aave tokens you could buy per comp token, right? And what's very interesting here is that as this chart rises up, this means that Compound is outpacing Aave. And if it's going downward, Aave is outpacing Compound, right? They're better performing against Compound. We've got a lot of technical setup here. We've got a triple bottom here where price held since back in February at this consistent range, 1-to-1 against Aave. It showed that it's not going to continue declining against Aave. And outside of that as well, we're expected to test this point of resistance back here from here in December 2020, here in April of 2021, and also here in May 2021. We've had this line chart here as just an example. Could it be that we're going to get a potential rotation? Because this is the logarithmic chart, bear in mind, guys. Aave used to be much weaker against Compound, or vice versa. Compound used to be much stronger against Aave. Could it be that we're setting up for a major technical breakout here? I got to say, Compound is one of the few plays outside of some of the larger plays that I'm definitely looking at building positions to. Apologies for my alarm there. But that being said, guys, these are the kind of things that I would say to watch for when it comes to the markets. Things that have great fundamental developments going on. As the market is fearful, there's continuous building going on, new relationships being built. This is the kind of stuff you want to watch to be able to catch those winners in the market. But they're also not the small caps that are completely illiquid, that could be a rug pull, right? In this market, you want to play it safe, especially if you're talking about the majority of your capital allocation. So that's it for today's video, guys. I hope you enjoyed my rambling. Again, if you like this kind of stuff, a great way you can support the channel, as always, is by subscribing to the Dash Report. And we don't just cover crypto. We do the same kind of analysis when it comes to equities, when it comes to commodities, when it comes to Forex markets. We cover the whole shebang. As I'm a macro trader, I like to follow opportunities anywhere. I'm not in love with crypto. Okay, I do love crypto, but it doesn't get in the way of where I put my capital, right? I want to focus on what's the best opportunity at hand, and we don't want to miss any of these opportunities, but we also don't want to overtly take too much risk and lose it all. So that's it for today's video, guys. If you like this one, consider dropping a like. As always, consider subscribing as well if you haven't, and join the Data Dash family. And I'll see you guys in the next video. Take care, everyone.